Zach is my name, and I just thought it's been a while since I recorded video, and now I decided just to help out a few guys who are really struggling in the financial markets. A bit about myself: I've been doing this for the last 20 plus years. We started in 2004 when there was no trading view, only MT3 and other few trade stations. A few brokers then. There was a lot of ignorance, but at the same time, there are people who are trying to learn, like myself. But over the years, a lot of changed. Things have evolved, and new ideas. The market has changed also. So there's a lot of changes over the years that has happened. But one thing for sure has not changed is the basic principle of trading. One plus one is two, regardless of where you are. Okay, so the basic fundamental trading structure has never changed, regardless of what happens. Either algorithms or market structures, whatever it is, it has never changed. So let me just show you the basic, simple formula of trading that is timeless. Even 20 years from now, you still apply it because this is what we learned. There was no order blocks then. We didn't learn all these new things, concepts that are coming up, what. Because bottom line is you're looking for two things: when to get in, when to get out. End of story. So it's knowing when to buy and when to sell, when to book your profits and when to cut your losses short. I mean, that's the only simple basic mathematics you can ever get into trading. There's no other. It's any embroidery, okay? So we don't really know much, but I think we know enough. So I'm not claiming that my strategy is the best, but I'm giving you something that I'm sure it will help you out because um, I'm sure most of you guys don't even look at the yearly chart, 6 months, 3 months. Most guys are just intraday traders, but let me tell you, the big players they look at the higher picture, higher time frames. Higher. To cut the story short, let me keep it very brief, simple, and also interesting for you. Higher. I'm sure most of you, you've just joined this FX maybe 5 years ago, probably just 10 years ago, probably just a year or two ago, and you're learning these things, and everything is saturated with so many information. You don't know which one is true, which one is false. You've done a lot of what you call system hopping, one strategy to another. Just keep it simple, okay? Don't complicate. Now, let me keep it brief. This is a yearly chart, GBP USD. Let me not go to gold. Everybody's trading gold. But if you have a small account, I'll advise you watch on a gold. Just use simple pairs like euro dollar, pound dollar, Audi dollar. Uh, if your account is less than 1,000, gold is good. It's gonna give you big money, but it can also take you home very fast. So it's easy to just learn pole pole as you progress. I'll show you why. Now let's get to the cake. This is a yearly chart. There's a way you draw support and resistance, and there's a way you use them. I'll teach you how to draw them correctly and show you how the market reacts to those levels. All right? It's not a random thing because these are institutions that they give us a picture of where they're going and what is likely to happen. So I'll draw something called color coding on this yearly chart. Let me use all these are years. So let me use this as a recent example. The last couple of years, the price has been unable to pass through that level. That is 30, 36 something. Okay. So that level is where has proved to be a very strong resistance. And then we have a support over here. All right. Simple. Nicely and neatly done. There you go. All right. So we have a resistance up and support down. Then we have this, which is also a support if the price was to come down here, because the rule is two or more candles closing below or above a certain level. So this is a bearish candle, opened above, closed below. Then this was a bullish candle, opened the same level and closed above. And then there was this another candle, and another candle, another candle. So these years, how many years? One, two, three, four. So for the last 4 years, the price has been above this level. And then 2025 was a very bullish move. It was only bullish the whole year, from January all the way to December, just a minor pullback. So this year, 2026, the price has been able to try to pierce through the resistance of the previous years, that is 2020, 2021, but unable to pass through. Let's see if the price will break by a monthly candle. We will see. Now, this is a yearly chart. I'm looking at it. So I can even put, in case it breaks this level, where it's going to go next. Because in case it breaks this level, it's going to come to this level here. That is my next major resistance. Couple of years, the price has not been able to pass through this. It was broken by this year. Then the price has been gallivanting below that level for a while. So this couple of years. So I'll put that level, and then I'll put this one here. All right. So I have my resistance and the support ready. So I'll go to 6 months. I'll show you why this thing is important, so that you know what is happening in the market without really struggling. So we all know that brown color represents they represent the yearly chart. Now let's give another color on monthly chart. So on 6 months, let's do red. So I know red represents the 6 months. So on 6 months, this the price I'll say is a major resistance right there. Slightly below it, we will do what? We will do this here. You see, the price. I used to teach my students many years ago, guy. I don't know if they are, but I'm sure they are doing whatever they are. Okay, let's do this. So the price broke this, became a support. It was broken again by this year, by this 6 months candle. Then another 2025 candle broke. So this year, 2026, the price has tried to pass through this level and it did not. That is 32.62, around there. So it's around that zone. So the price is above this support, but it's also below this resistance. So the price is likely to break either above this or below this. Now, these are 1 year and 6 months resistance and support. I know where they are. So these are not random levels. That's where they are. Remember, support or resistance is not a line, it's a zone. So this can be a zone between this and this. So, but here, there's a weekly, monthly, all this is not just a random, this tail. And this a lot of things going on here. But let me just show you how to just identify those levels easily. So this is 6 months. Let's go to 3 months. Okay, 3 months. Well, we have a support that the price has been unable to pass through for the last. So let's do blue. With the 3 months, let's do blue. We are doing blue. Yes, let's do blue. So 3 months, we have this support here. This is what I mean. It was a resistance. Now, when the price went above it, it became now a support. So, this 3 months, every candle here represents 3 months. So 3 months of activity. That's how strong it is. So the price has been unable to pass through this level, but trying to pierce through the 6 month line as well has been able to has been unable to pass through. So that it tells us the bulls are still in control until they prove otherwise. Otherwise, it's likely to reverse back up, or if it has been resisted from going further up, it is likely to be reversed. So, now let's try and do. So we have one, two. I don't have to. I don't have to do a lot of lines on my chart. I just like keeping two. Mostly, I like keeping it simple to avoid a lot of lines on clutter on my chart. So we have one, and then the next one will be this, which is here. All right. So this is also a resistance on 3 months. So the price has been unable to pass through this level for 1, 2, 3, and this is the fourth month. We're in the no actually yeah. So we're almost a year. The price is trying to break that level or not yet. So we have monthly chart. So we have resistance, support. So let's go to 1 month. Monthly chart. You'll see how this thing come in handy and understanding what is happening in the market. All right. Now we have monthly on the chart as we speak. We have few levels that are so obvious that the price is trying to break. So on the lower level, we have the 6 months. Okay, so on the monthly, there's this. I want to draw this as my immediate. So this one, let me pick what is the best color. I think I'll put magenta or purple on monthly. Fine. There we go. So we have this resistance that was turned into a support. And then I will draw that as my immediate resistance. Below here, there's another one here. Perfect. So in a good example, and so that you can understand what is going on, why did the price hit here and reverse? Of course, we have the 6 months level, right? Here, where the price just hit and reversed. Well, on monthly, there was this, all right? And there's this below it, obviously. That one right there. But since I don't want to clutter my chart, let me delete that one. I want to see what happened here on a weekly chart, because there's something here. So let's do weekly chart here and see why did the price reverse here and how you could have entered that trade very easily. We'll see both buy and sell. See, very simple. The price came and reversed at exactly 6 months level. But let's look at weekly chart. On weekly chart, I can see a very easy, simple uh, weekly. What am I going to choose? I'm going to choose which color? I think I'm going to do which is the best color on that part. Let's say green. Yes. So with the green part, I'm going to draw this level here. That is the sniper entry I got on a weekly chart. There's a resistance there, and I'm sure that's where the price reversed from. So this is not a guesswork. This is 36, 38 or something, 38.69, around that level. And that's exactly where the price reversed from. You see, sniper, spot on. So it is not a guesswork. It's knowing where the refining. It's called refining. When I refine, I know where the price is heading next, in case the price breaks one level going to another. So as the price going down, I knew how. I will show you how to use these lines now to your advantage, because now these lines will not make sense if you don't know where the price is going next and where the price is likely to reverse from. So remember, there's what we call confluence. The confluence here is the 6 months and the 3 months, and then we have the monthly level around there, and then we have this 1 week. So these are all major levels. So when you're looking at this on lower time frame, let's say H1, H4, there's a lot you're looking at. Okay, so for me, I always draw them from there to, let's see what happened here on a daily chart. On a daily chart, there's something. Yeah, on a daily chart, there should be something. You see where I'm coming from? Very far. So when the price is dropping or going down or wherever it's going, I'm not surprised. I know where the potential reversal zones are. We call them PRZ back in the days. PRZ is a potential reversal zones. Potential. It does not really mean that it's exactly that's where it's going. It's potential reversal zones. But there are some things we will look at, both fundamentally and technically, so that it gives us a confirmation where the price, if the price is really going to reverse from there. On a daily, I can see there's confluence there. On a daily chart, let's do right there, I'm sure. Here, let's do what? Let's do black. Okay, so this is resistance. Watu order block tulieni kwanza. We never we didn't do order blocks those days. So simple support and resistance, and then demand and supply zones. So this is where there's a confluence between weekly and daily and monthly and 6 months on the same zone. So this is a whole zone. This is a selling zone, all of it. So let's just do this. The whole of this zone was a selling zone. So if you're looking at the market and the price is coming, like we call them thrust, the thrust was really heavy, coming from down here all the way to this level. Then it stopped immediately. It hit our 6 months and daily and weekly levels. You see why it's important to draw them ahead of time. So if I look at it from H4, see where I'm coming from. All this is it's not random. I know where the price is coming from and where it's heading. Now remember, I want to look at how the price, when it was coming down, how it was reacting to those levels. Sour. Now, there was this resistance. The price has given us a go ahead. This is a selling zone. So I'll show you how to sell. And now, once you get into a sell, the price is likely to react on those levels. But remember, we drew them ahead of time. So when the price was coming down, it hit this level, reacted. Then this was changed, what you call change of polarity. Support turned resistance, resistance turned support. You always have to know them ahead of time so that you know this is a potential reversal zone. If the price breaks this below it, the price might come back to retest it and then reverse, or retest it and break it. Okay, so the price, this is remember we have drawn from 6 months, 1 year, 6 months, 3 months. So the blue represented what? The 3 months. So we know these are all potential reversal zones when the price is coming down. So since the price is already here, okay, so these are actually like our reversal zones. So we had a confluence of daily resistance, weekly resistance, 6 months resistance, and then we have a 3 months or 1 month resistance around that level. So we know this is a very strong level. So basically what we can say is, if the price reverses down from here, up from here, then we know when the price is coming down, we're expecting a reaction on those levels. So we have a reaction here, reacted, it broke. Then it came down, it hit this level again, reacted on 4 hour. We're looking at 4 hour. I rarely go to those small time frames. There are a lot of noise. So I know when they trust me, swing trading has more money than intraday, unless you're doing really high frequency trading on HFT trading. So we have this reaction. This now became a resistance, broke that level. So this yearly level has been broken by 4 hours. So we're expecting a minor reaction all the way down here when the price comes back again. So you can see the reaction on those levels as the price is coming down, 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 all the way. Look at what happened. It reversed at the 6 month level where we drew long time ago, remember? So this is also our potential reversal zones. So question, how do I know when to react to any zone? This is what you look at. Okay, so if you go to daily chart, if you look at the daily chart here, the reaction is the price came from 6 months support resistance, weekly, whatever, and now here we're going down. So we're expecting the price to react on any of those levels, but it didn't. Just reaction then come down, reacted then come down. So it was breaking us going down. So, but you see, there's the 6 months support here, right here. Okay. So there's a confluence also on how to, you might say this is a demand zone, this is an order block on daily chart, fine. But as you're looking at the order blocks and other stuff, I'm not saying that US is bad. I'm just saying there are ways to trade the market that is so simple. We don't have to complicate those complicated trading stuff. I also created my own scanner for those things. But let's look at it here. There's a daily chart here that gives us that signal. Let me show you. We said black on daily. So the market came all the way down and reacted on this level. So this was what you call something called the rule of first touch. The rule of first touch, it is always profitable. Okay, I want you to look at the chart. Everywhere you look at, regardless of which time frame, go draw the lines from whichever time frame you choose. Maybe you can choose from 6 months, 3 months, 1 month, whatever. Every level you choose, the first time that level is hit from either down or up, the reaction is always profitable. Because the first time does not break the first time. Mostly it breaks either the second or the third time. It breaks maybe the second or the third time. Most of the time it hits the first time, then reacts. It doesn't just come and break. Like example, this level was just hit first, then reacted, then hit again, reacted. It was broken the third time by a very heavy thrust candle. So the same here. This level, the price was dropping down drastically, and then it just hit this level. So you might say, I can see there's a fair value gap here. You see, the way you are, most of the guys, those guys of order block will tell you there's a fair value gap here. Well and good, there's that gap here, right? There's that gap there that you can see there. But you see, for me, before I know those gaps and stuff, we used to trade lines. Just know this is a zone. And the zone I'm talking about is this. Look, it's very simple. This is a support. This was a support now. Are you together? And then, because I'm calling it a support, is because the price went above it. Remember, change of polarity. When the price breaks above, it becomes a resistance. Now, it becomes a support. When the price now, this was a resistance at some point because this is a couple of days. This one was a week. 1, 2, 3, 4, 5. So this is a full week. The price gallivanting around that area, and it was broken the following week, and then this now became a level of interest, and now slightly below it there is this. There's this resistance which turned into a support. So I will draw that and also draw this, which now is my recent one. So I have the purple one, remember, represents the monthly. And then we have this, the black one, which is the daily. All right. And this level. So I know this whole zone is buying zone. This whole zone is buying zone right there. There's no two questions about it because slightly above it there's a month, there's 6 months resistance, no support, which now is likely to affect the market to go in the opposite direction. So as the price was dropping down drastically, it stopped there and started stalling. So when you look at it from now, H4 and H1, now you can look at the price saying this has broken, this has changed character, it has done whatever. But instead of using those complicated strategies, you rather just learn how do I know when to put these levels in the right place and when to get in and when to get out. So you're expecting the price to drop from here to get to rise from here because this is a major support area, major reversal zones, PRZ, because we have monthly and we have 6 months level. I'm expecting a reaction. So it broke, but it never gave me a really sign of going further down. And then fundamentally, the dollar was doing badly. So here we have a reaction, and then the price came and formed a double bottom. So once it does, but double bottom is a sure bet we are going up. All right. So these levels are the most simplest way of analyzing the market. I mean, there's no. Um, Most of my people who have trained many years ago, they still use this strategy. I'm surprised. They're like, man, I've tried everything, but this is the most simplest and most effective way of just trading. I just know when the price comes here, I'm going to buy, and then I'll show you how to what to look for, so that uh, you know exactly that's a confirmed level. But in the meantime, I just wanted to show you how do you draw these levels effectively, and you see how effective they are when you're doing real market. Because right now I'm expecting when the price comes, it's going to come to this level, then to this. Remember, this is a 1 year this is 1 year level. So on 1 year level, there's a daily resistance and support going on as we speak. It's not like the price is just gallivanting there. Why is the price playing around this level? Look, here we go. That's why the price has not been able to pass through that level. So when it breaks, next is here. But let me draw another one on daily, right here, above monthly. There is that one. Okay. So I'm expecting the price to come and react from those levels. So when the price is going to go down, why did the price stop here? Because there's a 6 months level. See, it's no guesswork. So when the price comes and breaks here, I'm going to come TP1, TP2. Okay, this is TP1 and then TP2. I'm expecting price to reverse from here. Given the fact that fundamentally now the dollar is going to get stronger, I don't know, but I'm sure I'll get a reaction from here, and then the price is going to drop down further. Or if it doesn't, remember there's a yearly resistance that the price has been unable to pass through. It might pass break it and go to the next level. So all these levels, I'm looking at them from a lower time frame, which is 1 hour now. I know these lines are not guesswork. I know what to do when I see price reacting on those levels. They're not guesswork. So I know this is my demand zone, and this is where I'm expecting reaction, and why the price has been unable to pass through this level. So let's go buy. So if the price is going to buy, I know where to react to get a reaction. So this will be my TP1, this will be my TP2, this will be my TP3. So I'll show you how to draw now. This combining now the support and resistance and now the trend lines. Okay, that's how now you enter the trades to confirm a line or a zone has been confirmed. Let's say, like example, this pound dollar. Okay, this pound dollar. Where did the trend start? The trend started right here. The moment the price rejected this level is where the trend started. By changing, breaking the previous high. The last swing high is this one. The last swing high is the high that broke the low, but it was taken out. I don't know if you understand what I'm saying. Let me give you an idea. This high was broken, but this is the high that broke this low. Okay, so when this high broke this low, it signified that the price is going to go further down, but it didn't. It found a level, that demand level that told, decided the market is oversold. Now it's time to buy. The moment this high was broken, it gave us a clear indication that the bulls are in control, and that happened when the price started going up further. So this was just likely, mostly on those major levels. Expect double bottom and double top. That's a subject of another day. That those levels are very important, so that you know, not every double bottom works, not every double top works. It's double bottom happening where, or double top happening where exactly, so that you know, even the brokers know you're looking at the double tops or double bottoms. So they will stop your hunt. They will do what cost of hunting. They will clear your stops. You guys call liquidity sweep. Uh, Wazae kama sisi we call it wash and rinse. Yeah, this was our language back in the day. So you guys call liquidity sweep, as we call it, wash and rinse. So these levels play a very major role. So I'll show you how to now throw the trend lines and channels, knowing that the price is likely to either reverse going in the opposite direction, or it's just a fake out. Also, how to identify for fake outs. There's a lot of technical thing going on here, but I just wanted to show you in a simple language on how to do, just from 1 year, 6 months, 3 months, 1 month, 1 week, daily. All those levels, they either complement each other through confluence, or they give you an idea where the price is likely to head next. This is what I can tell you as an official statement. The price always move from one support to another, on one resistance to another, regardless of what you're trading. Sawa, it moves from one level to another, one support to another, because the institutions are also trading, not like intraday. These guys are trading. They use weekly and daily and monthly charts, but so they're not there for intraday. No, intraday is for retail traders. But for those big institutions, they can even hold for a position for 6 months, 1 year, 3 months, depending on the pair. So I think this is the most common traded currency pair, pound dollar. The same applies with euro dollar. Let's look at gold and see if we can do something with it. Where's gold? Where's gold? Where's gold? Where's gold? Let's try gold here. Uh, it's the same thing. I like doing this. This. I go to 12 months. So for years, gold has been on uptrend. Uptrend consistently. Uptrend. Oh man, there's no much structure here. Just uptrend. 6 months, same uptrend. 3 months, same uptrend. 1 month, same uptrend. So uh, it's easy, because even if there's a pullback, it's pullback you expect it to reverse at any time. Like where it is, I'm sure there's a weekly resistance. Yes, here. There's a resistance that the price re- reacted to. This is what reacted this week on a weekly chart. Get the idea? So this one, that's where there was a reaction, and right there. Okay. So this is the reaction on a daily chart. Let me see if I can see something more clearly. Uh, it's never guesswork. So okay. So on a daily, yeah, that's more like it. Zone of buying. So if the price is going to go up, We are going to have a resistance 1, and then we are going to have a resistance 2, and then we're going to have a resistance 3 right here. This is a daily chart. So I'm expecting price to react on those zones easily. So if the price is going to come, it's going to do something like this. It's not going to just break and continue going up. No, most likely those on a daily chart. I don't know. I'm yet to look at it. So I just wanted to show you how to do those things on currency pairs, which is easy for you to trade. Uh, if you look at any other pair that you think of, you can try. Then give me a buzz. Eh? Let me know what you think because it's possible. Mm, any pair. Those guys who do gold, I think if you trade the Audi USD, you'll make a lot of money. No, all right, no worry. Let me see. You're starting. No, 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 no. DXY. DXY tells you what dollar is going to do, and then it gives you an idea what the other currency pairs are going to do. Yes, if you do DXY, DXY is likely to tell you the exact uh, picture of the currency pair or anything to do with the dollar. Okay, so refer to always refer to DXY before you do any other thing. So on 6 months, just do perfect. So we have monthly. Let's look at 3 months. So remember, when DXY is gaining, dollar is gaining. Okay. When DXY is losing, dollar is losing. Okay. So it's as simple as it is. Why did the price stop here? Because there was this. There's no random thing. This is what stopped the market from going further down. This guy is here. So this was a flatbed. This was a flat floor, nice one. So the price could not. It was broken, yes, but now it became a support. So when the price is going to go further up, there's a resistance here. So there's no guesswork here. There's a reason why the price. So you see here, simple. So before you say there's a value gap and stuff, okay, there are other things that you don't know. So there is this also, which I'm expecting the price to come and react to, and then there is this, and then there is that up there. So when if the price decides to break down, this will be my next support right here. Remember, it has come from all the way. So this was a double bottom. See, double bottom, then reacted. So when the price comes, it's going to be a triple bottom or break it and break it further down to this level. Yeah, right there and right there. That's my zone. Nothing, no magic, man. Simple. Remember, this is how I used to trade. Imagine simplicity, and you make your money. There was no prop firm. There was nothing, man. It's just you on the market. There was no prop firm. It's either you're making or you're losing. There is no two way. Boss. Anyway, now I think you've learned something from that short video. There's so much I can share. So next one, I'm going to show you about the trend lines, the channels, and some nitty gritty details that I'm not. I don't know. I'll share them as time goes by. But the simplest way of trading is just keep it simple. Don't complicate. So if the DXY is going our way, you can see what is happening on GBP USD. Okay, so if you go to GBP USD, which one? There's so much going on there. So easy. So when the price is now changing direction, you know where it's coming from and where it's heading next. So there's no guesswork. So when it comes to those levels you're talking about, I have my own scanner that scans all those. Like I said, things have evolved. I'm also evolving. So I know when the price now came to those levels, so it confirms with what my zones are. So draws a demand zone for you, support and resistance. What do you call this? Change of character and stuff like that. So the zones that the scanner gives me is also the same one I've drawn manually. So when they confirm that this is where there's a resistance here, you see these red zones here, these are all resistance zones. So there's monthly and there's weekly level. So I know the price is likely to reverse on these zones anytime. So my interest will be on this zone most likely. This one with the purple line, which is monthly, that one is likely to see. So the ones that are in confluence with my levels, those are the ones that I take them serious. And I know the price is likely to react comfortably. But most of the time, my chart is clean. I just pop in just to check. Who's telling, just have a few witnesses telling you the same thing. Then you know you're right. So your analysis should be very simple and very clear. So you know what to do. So I'm expecting price to come to these levels to react. Like, remember when I told you about the issue of fast touch? Okay, you remember when the price came to this level? See, this black line here, it was touched the first time, okay, by this candle, and then the reaction was very nice. So it hit that resistance, then reacted nicely. Now the second time, tried to react, tried to break it, didn't. So probably the third time is going to break and head all the way here, all the way here. So basically, it's about just learning how to trade and trade simply. And don't complicate. I'll teach you about money management, risk control. The idea is to keep your money and grow it. Okay, don't donate your money to the broker. Okay, all right. Keep it simple, keep it brief, and don't complicate. So, don't complicate. Just keep it simple. Simplicity. It gives you a clear picture. If the price is here, next is here. If it's the price is here, next is here. If it passes this level, next is here. If it passes this level, next is here. If it passes this level, next is here. So you exactly know ahead of time. If the price reverses from here, I was expecting such a reaction. So that's why we call these potential reversal zones. It's not like a real reversal. It might react, or it might break. So it's up to you to look at the sentiments in the market. So the reaction on the breaking, it all depends on the market volatility and which level are we looking at. That's why we do color coding. Color coding is so that it gives me the difference. So I know the purple one represents the monthly, the black one represents the daily, and then the brown one is a yearly, and then the red one is 6 months, and then the blue one is 3 months. So I know every level here is as strong as the time frame it represents. Okay, of course, uh, 1 year level is stronger than 6 months. 6 months is stronger than 3 months. 3 months is stronger than 1 month. 1 month is stronger than 1 week, and so on and so forth. So which level are we looking at? Is it 6 months? Is it 3 months? Is this 1 year? So what do we do? On 1 year, what time frame are we supposed to be using? That's another thing I'll teach you. Okay, if I'm looking at the 1 year chart, which time frame should I be looking at considering that this level now it has been unable to pass through? Which candle should I look? Should I look at the candle from 3 months or 6 months or 1 month or 1 week? So it all depends on your model of mindset. And if you are a scalper, then you just need to do 4 hour day, 4 hour, 1 hour, M5, something like that. But on this swing trading, you rather do higher time frames that you don't need to get in and getting out. Just get in and then you hold your trade for a while. Okay. So there's a lot I'll be teaching poly as we progress. I hope this thing will help you because I know there's a lot of technology and a lot of advanced things going on. There's automation, AI coming in, but let me tell you, the simplest things they're the ones that work. Easy, believe you me. It's simple, straight to the point. It's simple. I didn't say it's easy. I say it's simple. There's a difference. So make sure you do your homework nicely. So practice if you can. Just take one random pair and learn from what you've seen in this video and see what you can do. Okay, I'll teach you about other ways of looking at the validation and invalidation. There's so many ways of trading this thing. I'll teach you about validation and invalidation points, where now we are using a different way of trading. Validation, invalidation points on higher time frames, and how to look at inside formations, outside formations, and what is happening so that you can interpret the chart using one or two things. So you've drawn your support and resistances, and now you go to other nitty gritty. It's called refining refining the entries. So refining the entries will have a different mindset altogether. I'll show you how to go about it. All right. So take a pair. I'm challenging you, and then do your thing. All right. I guess I'll see you in the next video. So you have a good one. Cheers.